Hi, my name is Alex, and I'm with Gustin Cho Associates at Loan Cabin. I'm going to talk to you about delinquent tax bills and tax liens and judgments. So let's say you filed your 2018 returns and you owe a balance of $1,000. And if they catch wind of that, the underwriters, they're going to want you to either be on a payment plan or pay it off. So if you can't pay it off and you go on a payment plan, these are the rules. Fannie Mae, Freddie Mac, and VA want to see one payment. FHA wants to see 3 payments. So you can't pay 3 payments in 1 month, so you have to wait actually 3 months for the payment plan to work its way through on FHA, and just make 1 payment for Fannie Mae, Fannie Mae, Freddie Mac, and VA. So you have to set up a payment agreement. It's got to be official. The IRS has to sign off on it and accept your payment agreement. You have to make 1 payment for those 3, and FHA you have to have 3 payments. And then they'll count the debt against you for your debt to income ratios. Now, if you have a judgment, you can do this. They all let you do this. So if you have a judgment for like $3,000, you can set up a payment plan and pull yourself out of judgment status and get on a payment plan. Then you have to make 3 payments on that judgment, and they can close the loan. Not all banks will do this. We have some banks, investors that will do this. So give us a call. So that's 3 payments on your judgment. Take it out of the judgment status, make a payment plan, make 3 payments, and you're hit for the debt to income ratio on that. Tax liens are a little more complicated. So Fannie Mae, Freddie Mac, and VA, you may or may not run into a tax lien. So if you're refinancing a house, the tax lien's on your house, you will absolutely need to get a subordination agreement from the IRS. No bank's going to insure behind the IRS. So you have to, the IRS has to be a second lien position. So you have to fill out paperwork, sent to the IRS, and ask them to subordinate. Now they're not going to subordinate if you're doing a cash out refinance because they're going to want the money. But they may subordinate on a rate and term if you increase your payment plan with them or some kind of agreement with them. But you have to go on a payment plan with them and subordinate with the tax lien if the tax lien shows up on title. If you're doing a purchase and the tax lien doesn't even appear, the title company doesn't say anything about the tax lien, you just have to have 3 payments made with a payment agreement for all of them. Now, FHA is the tricky one. FHA, you're gonna have a CAVRS problem. So CAVRS is something that protects for any delinquent government debt, and it won't let you order a case number. And what a case number is FHA on every loan, a case number is the very first thing that you order. And it'll bring up anything bad about you, that you have a small business loan, a student loan collection, or tax liens. It will prevent you, it's a hard stop, and you can't get through it. So that's gonna be the tricky part, is getting through that hard stop on the CAVRS. Now VA, Fannie Mae, and Freddie Mac don't have that CAVRS stop, so that's gonna be a problem FHA. So FHA is the trickiest one of all of them to get through a tax lien. Judgments will not probably appear on a CAVRS unless it's a government debt. So CAVRS is a protection of government debt that went delinquent. So if it's a tax lien, that's government debt. You're probably not gonna get through CAVRS. You have to call CAVRS up and say, hey, I'm in a payment arrangement, can you release me from CAVRS? There's a chance that can happen. It's kind of complicated. I'll coach you through it. So this is a really complicated thing, so give me a call. We'll explain it to you. If you like this video, please like it. If you have questions, leave them below. We're going to write some blogs on this because we're learning that this is a kind of a complicated issue, so we're going to try to explain it to you the best we can. Thank you very much.